This is the lecture on Introduction to Financial Statements by Professor Carol Bruton, fall of 2014, Bear Accounting 201. There's 4 financial statements for a corporation. There's the income statement, statement of retained earnings, balance sheet, and statement of cash flows. The income statement shows the revenues and expenses for a period of time. It uses the matching concept, which matches revenues with expenses. Net income is equal to revenues minus expenses and is also called net profit or net loss. The statement of retained earnings shows the changes in retained earnings for a period of time. The balance sheet shows the assets, liabilities, and stockholders' equity for a point in time. The statement of cash flow shows the changes in cash for a period of time. Now we're going to have an in-class assignment. From the following list of accounts that are in random order on the next slide, please prepare an income statement, statement of retained earnings, and balance sheet for Computer King for the year ended December 31st, XA. Now you can see the random list of accounts. Okay, let's see how to prepare the statements from this random list of accounts. The first statement is the income statement, and the income statement starts off with a heading. The heading has the name of the company, Computer King, the name of the statement, income statement, and the date, which is a period of time, for the year ended December 31st, XA. By the way, XA stands for just any random year, so it can be 2018, 2008, 2028. That's what we use in teaching. Okay, the revenues account in this example is fees earned, and it's $7,500. The expense accounts in this example are salary expense, rent expense, supplies expense, insurance expense, interest expense, depreciation expense, utilities expense, and miscellaneous expense, and then total expenses. And note how they all end in the word expense, and they will, so you can always count on that for an expense account. And then you get net income before tax, which is $3,150, and then the income tax expense is $100, and then your net income is $3,050. Note how income tax expense is shown separately from the other expense down at the bottom. That's just tradition, and we always do that. On the next page starts the retained earnings statement. The retained earnings statement starts with a heading, which has the name of the company, the name of the statement, and the date, which is a period of time. And the components are the beginning balance for retained earnings. We add to that the increases in retained earnings, like net income. We would deduct in a net loss. And then we deduct from that the decreases in retained earnings, like dividends. And then that gives us the ending balance. So let's look at a retained earnings statement. Here's an example. Note the name of the company is Computer King. Retained earnings statement is for a period of time, so see how the date is for the year ended December 31st, XA. So we start off with the beginning balance, retained earnings, January 1st, XA, $13,100. We add to that the net income that we got from the income statement, $3,050. And then we subtotal it, $16,150, and then we deduct the dividends, $100, and then we get to retained earnings ending balance. The next page is the balance sheet. The balance sheet is also called the statement of financial position. The heading is the name of the company, the name of the statement, and the date, which is a point in time. It includes the assets, what you own, the liabilities, what you owe, and stockholders' equity, what you own, minus what you owe. In account form, the assets to the left, the liabilities and owner's equity to the right. In report form, the assets are on top and the liabilities and stockholders' equity are underneath. So let's take a look at a balance sheet. Here's a balance sheet example. The name of the company, Computer King, balance sheet, December 31st, XA. Notice the assets on the left. The assets start with the current assets separated out. The current assets are cash, marketable securities, accounts receivable, short-term notes receivable, inventory, supplies, and prepaid insurance for total current assets of $7,450. And then we have the property, plant, and equipment. So notice how we have the equipment first, less the accumulated depreciation equipment. And then we show the net, the building, less the accumulated depreciation, and then we show the net. And then land doesn't have accumulated depreciation, so it's just shown. And then total property, plant, and equipment. And then our total assets of $16,450. The liabilities are on the right side. The current liabilities start off. We have accounts payable, then salaries payable, then short-term notes payable, then interest payable, then unearned revenue, then rent payable, for total current liabilities of $305. We then have long-term liabilities, which is notes payable, bonds payable, and mortgage payable, for total long-term liabilities of $20. Then we total all liabilities for $325. Then we have our stockholders' equity. We have our common stock, which is $75. We have our retained earnings that we got from the retained earnings statement on the previous page, $16,050, for total stockholders' equity of $16,125, and then total liabilities and stockholders' equity is $16,450. And it's no coincidence that they match total assets. Total assets will always equal total liabilities plus stockholders' equity. The next flow addresses the cash flow statement. The cash flow statement will be covered in a later chapter, so you only need to know a limited amount about the cash flow statement at this time. Just note the components of the heading: name of the company, name of the statement, the date, which is a period of time, and there's 3 sections for the cash flow: the cash flow from operating, cash flow from investing, and cash flow from financial activities. That concludes the lecture on Introduction to Financial Statement. Thank you very much.